Good morning. Welcome to another edition of EPG. I'm, of course, Greg, your host, coming to you from beautiful Reykjavik, Iceland. Today is an important day in Icelandic history. It's not their Independence Day. It's not the ending of a major war. Today is the 15-year anniversary of a financial nuclear explosion on the island. So let me guide you through it. To give you a crash course in the 2008 financial crisis, basically what was happening was that institutions, countries, banks were all getting into massive amounts of debt with the hopes that after they would acquire assets, those assets would increase and appreciate in value. That didn't happen. So why Iceland? Iceland is an interesting case study for a lot of reasons when it comes to the financial crisis of 2008. Number one is that it really had no history of investment banking. Reykjavik is not New York. Reykjavik is not London. Reykjavik is not Paris, Berlin, any other major trading hubs. It was a new one on the scene. They have an incredibly well-educated populace that a lot of people didn't want to get into the local businesses here, which include aluminum smelting and cod fishing. So with that, they saw a lot of people making a lot of money and they wanted to get in on it. And why not? So why I'm standing here with the Central Bank of Iceland behind me, what did Iceland do when it was awash with all that cash? Well, the first thing that you need to realize is that there are two types of banks. The investment bank, which I mentioned before, which makes investments, obviously enough. The second is the retail bank. Now, those are the ones that have your savings account. Those are the ones that have your checking account and your mortgage. So the thing is that in Iceland, the investment and retail banks are one and the same. So what these banks, there are three of them, the major ones of Iceland, were doing was that they were trading assets amongst themselves in the billions of dollars. So that way they could be shown that they were creditworthy. And what they did with that was that they were able to start buying up, quote unquote, assets all over the world. These included a Danish department store. This included airlines. This included football clubs. So they were spending like it was going out of style, because eventually it did. So what happened in September of 2008? Well, if you have a credit card, you know that eventually you need to make a payment on it. You can make minimum payments, but there will be interest charges. The problem is that payment was due in full, and these banks couldn't pay it. They owed 6 times the gross domestic product of Iceland. That was roughly $100 billion. So based on the population at the time, 300,000 people, that means that every man, woman, and child in Iceland owed $333,000. So what is a country to do when they owe that much money to foreign creditors? Well, in this building behind me, which is the Icelandic Parliament, they decided that on October 6th, 2008, they would let those banks fail. So, overnight, almost 100,000 people lost their life savings. People that could get foreign currency did thousands of dollars worth, tens of thousands of dollars worth, and hid them in board game boxes in their houses. They were worried that basically they were going to be pillaged like the Viking days of yore from people coming to try to rob them of their currency. It was a dark time. So there's a bit of a silver lining to all this. A lot more people are traveling to Iceland on vacations. They are staying in hotels. They are eating at restaurants. They are participating in excursions and doing all sorts of wonderful, fun things. But I will say this, there are two very big lessons from the financial crisis of 2008, especially in regards to Iceland. Number one is that you need to be fearful when others are greedy, and greedy when others are fearful. And number two, we don't learn. This is a new investment bank being built here. Thank you very much for your time, and get out there.